Hey everyone, we're live here this morning for Canada's interest rate announcement. It's April the 10th. We'll have an interest rate announcement coming up for all of us here this morning at 9:45 a.m. We're joined here with my colleague Interest Rate. She is my mascot here on Canadian Mortgage Weekly as we cover these interest rate announcements. She's just hanging out right here with me, and we have, as usual, her prediction that will come a little later this morning as to which way the interest rates are going to go. So, on today's episode, I'm covering off the 5 indicators as what's happening in the market as to what the market is indicating is going to happen with interest rates. Are they going down? Are they going up? Are they staying the same? I'll also cover off with these 5 indicators which way I think the Bank of Canada will lead this morning with their interest rate announcement at 9:45 a.m. Thanks for joining me today. My name is Joe Bladek, and it's Canadian Mortgage Weekly, Canada's weekly mortgage video news podcast. We do these every time there is an interest rate announcement. And this morning, it's a highly anticipated rate announcement. It's a big one, especially because a lot of Canadians are now hoping that rates do come down in Canada and that rates do show easing, right? And a lot of Canadians are hoping that with rates coming down, that there will be a stimulation to the housing market and that they'll be able to sell their homes for what they want and move to their next home. Because there's a lot of people thinking that homes are still worth a lot more than they were back in 2021 and 2022. All right, so interest rate here is ready to go. She's eyeing the hay and my lettuce. Let me just grab her here so you guys can say hello. All right, guys, say hello to my mascot, Interest Rate. She's here this morning on Canadian Mortgage Weekly Live. She's going to hang out with me and predict which way the interest rates are going. So as I mentioned, today we're talking about the 5 indicators that the market is pointing at which way the interest rates will go. Let me cover off these, and then we'll get into interest rate, my mascot's prediction, and then at 9:45, we'll look at what the Bank of Canada is actually saying, what direction that they take, and how that's going to affect you as a mortgage customer. All right, so one of the factors and one of the indicators in the market that I like to use to determine whether or not interest rates are going up by the Bank of Canada is the bond yield. So if you're joining me on TikTok, Facebook, Instagram, X, just hang in there as we cover what's happening with the bond yield. And the bond yield is like a stock. It moves every day, every minute of every hour. So right now, I'm showing the bond yield is at 3.701%, just 10 minutes prior to the Bank of Canada's rate announcement here. And that represents an increase of 10.4 basis points from this morning's open. So that means that there is a highly bullish angle on the interest rates, meaning that highly bullish, meaning rates could go up or stay the same. And in this case, with the bond yield going up to 3.70, I think that is an indicator of stability and staying the same. We would see a drop in the bond yield if the market is sending signals that they're thinking that there's going to be a drop in the rates. What do you think, interest rates? Are you ready for your prediction there? All right, so her prediction today we have set up as if rates go down, she's going to eat the hay. And if rates no change, she's going to eat the lettuce. And if rates go up, she's not going to eat anything. But I see she's eyeing the food already. So it's going to be one of the two. Nope, not yet. All right, so the bond yield is one of those indicators. And the bond yield is indicating that rates will stay the same or go up. Unemployment in Canada is the second indicator I like to use. And unemployment in Canada actually last month did change. We went up to a 6% unemployment rate, and the prior month was 5.8%. So that is really interesting in Canada because for the last year, we've seen unemployment not really move much at all. For example, there was a plus 0.1% the prior month. And throughout the entire year, we saw a plus 0.7%. Today in Canada, it's 6.1%. My apologies, not 6%. So in 1 month, we saw an increase of unemployment of 0.3%. So that's the biggest increase in 1 month so far. And this has a lot of media outlets really concerned about Canada's economy going into the spring, going into the summer. And when this news did come out, we did see the bond yield go down, indicating that the market was thinking that rates might come down in the future. However, because the unemployment increase is still relatively very small and relatively looking at the entire year, we could see 1 month go up, 1 month go down. So with a 1 month worth of data here, I don't think that the Bank of Canada is going to use this as a indicator to lower rates, but they will probably mention it in their announcement this morning. So because of that, I think rates are going to stay the same based on this information, but there will be mention of it saying that they're going to keep an eye on it going into the next rate announcement. So that's what I think is going to happen, in particular with the unemployment rate indicator. All right, let's take a look at the next indicator. Okay, interest rate. I know you want that lettuce. I know you want that hay, but just hang on. So I'm joined here today on Canadian Mortgage Weekly with my mascot, Interest Rate. She's here to help me predict which way the interest rates are going this morning. And with that, she really wants to eat something. So if she eats the hay, rates are going down. If she eats the lettuce, there'll be no change in rates. So inflation indicator in Canada, let's take a look at what's happening with inflation, because inflation is the reason why we're all here. Inflation is the reason why the Bank of Canada raised rates in the first place. So looking at inflation right now, I see that the inflation rate did go down to 2.8% last month, which is really great because considering the month prior to that, we were at 2.9% in January and then 3.4% in December. So some nice decreases in inflation there. Does that mean because of the inflation rate being now at 2.8% and trending downward that the Bank of Canada will lower interest rates? Actually, I don't think so, not on this data specifically. This data specifically is going to show that the Bank of Canada is doing the right things and the inflation rate is heading in the right direction. However, because inflation is not at 2% just yet, and 2% is where we're aiming for, I believe the Bank of Canada is not going to decrease rates just yet based on the inflation number, but they will show in their report this morning that 2% inflation is where they're looking to get at, and that they are still working on getting the inflation rate to that 2% mark, and that what they are doing is working, and that they will continue doing what they are doing because it is working. All right, so those are the three indicators we covered this morning as to what I believe and where the market is thinking rates are going. We covered off the bond yield being number one. That is indicating that the rates will have no change or possibly go up because the bond yield is actually being very aggressive on higher rates. Unemployment rate has gone down slightly, 0.3%. That's the second indicator. Sorry, up slightly. So that means unemployment's gone up. Employment's gone down by 0.3%, but it's still a relatively small decrease comparatively to the entire year, and we could possibly see an increase next month. So this will be mentioned in today's report. However, it will not be an indicator for lower rates just yet. Inflation, it's at 2%. It's in the right direction. However, I don't think that inflation at 2.8% warrants a rate decrease just yet. We'll probably see a rate decrease a little bit down the road in 2024 is my anticipated rate decrease here. But let's take a look at the fourth indicator, and that is house prices. And what's happening with house prices? Well, for the last number of months, since about October of 2023, we've seen house prices waver around the plus or minus 1% to 2% range. But just last month, we had a 1 month change of 4%, and that is in the positive direction. And house prices did go up to $685,809. That is a 1 month change of 4% in the positive direction. That is an average national Canadian house price, and it's trending upwards now. And that's a pretty high trending upwards. That's the highest increase we've seen since prior to the drop of 2023. So very interesting to see that house price number come out for last month, and we should see the new numbers come out either next week or the week after that for house prices on the following month. So house prices are showing strong growth for the first half of the year. This could just be in correlation to the spring market. The spring market usually does have a high correlation with an increase in purchase price, but I don't think that this spring market is going to be that hot. It seems almost as if I'm hearing from agents, other realtors, other mortgage brokers that we did have a spring market, but that was February. And now, since March and April have passed, it's kind of died down since those February increase in numbers. So, taking a look at this, could the increase in house prices correlate with that increased spring market? We'll have to see what next month holds for us. We could have another minus because we have been seeing house prices in Canada plus or minus 1 or 2% for the last few months since October, with this biggest increase lately. So does this warrant a rate increase in Canada or a rate decrease in Canada? I don't think so. It's slightly higher, spring market related probably, and it could really have nothing to do with where the market is thinking rates are going at. So I don't think that rates are coming down because of this data. I don't think that rates are going up because of this data. I think this data is neutral. All right. And the last economic indicator that I believe impacts the interest rates in Canada. No. Okay, looks like interest rate has made her prediction, by the way, guys. She's broken into the food here. We had hay for rates going down, and we had lettuce for no change. And she broke into the food, and she's eating the lettuce, which means no change in interest rates. So interest rate, my mascot here on Canadian Mortgage Weekly, has made her prediction. I'm opening the food up so she can just go at it now, and we'll see if she even eats any hay at all. All right, so getting back into the economic indicators, we have the US Fed direction, and that is the fifth economic indicator because the US is such a big economic powerhouse. They're about 10 times the population of Canada. So they have such a big, enormous amount of impact on our economy. And because they also have interest rate decisions multiple times a year like Canada, and because those rate decisions impact Canada in such a large way, I think this is also a large economic indicator as to what will happen with the Canadian interest rates. And so much so that if the Canadian government decided to lower interest rates prematurely in comparison to the US government, it could have an impact on exports and imports because of the Canadian dollar. And with the Canadian dollar being affected, if the Canadian dollar goes down in value, it could have a huge impact in companies exporting into Canada, and it could impact trade levels in a negative way. Where am I getting at with this? I'm getting to the fact that the US has not moved on interest rates and are not planning to move on interest rates in the next few months at all. In fact, Jerome Powell has said that their economy is doing really well, and they believe that it might be higher for longer. And that was the sentiment coming out of the last rate decision. Seeing that made me wonder if all the folks that I've heard thinking that rates are going up in April, are those wishes going to come true? Not up, sorry, down in April. I'm really confused here with the rates. So let's take a look at where the rates are going. The Bank of Canada is about to make the rate decision announcement here. We're going to check this live here and announce it just in a few moments here on Canadian Mortgage Weekly. I am so excited to be able to share this news with you. Interest rate has already made her prediction that rates are staying the same. Let's see if we have an announcement from the Bank of Canada yet here. All right, so we have an announcement, everyone. Bank of Canada has maintained its policy rate, meaning that rates are staying the same for April the 10th. Bank of Canada has decided that they're not changing rates, they're not decreasing rates, they're not increasing rates. And in that same statement of Bank of Canada maintaining the policy rate, they are indicating that they are continuing quantitative tightening. So, if you want to keep and stay with me on this channel watching Canadian Mortgage Weekly, not only has the Bank of Canada decided to keep rates where they are at and not change them, Bank of Canada has not lowered rates, everyone. We're going to get into what they are saying about the economy in just a few moments. If you're just joining me here today, I'm here with Interest Rate, my mascot. She's a guinea pig here. Everyone say hi. All right, we got her here. She is eating the lettuce right now. She was making a prediction, everyone, as to which way the rates were going this morning. And she correctly predicted that rates are staying the same. And the Bank of Canada just did announce just that rates are not going down, that they are staying the same. Because of that, how is this going to affect you as a mortgage holder in Canada? Specifically, if you have a variable rate mortgage in Canada, you'll notice no change at all on your payment, no change at all on your amortization, how much time is left on your mortgage. That's all going to stay the same for the foreseeable future, at least until the next rate announcement. If you have a home equity line of credit or an unsecured line of credit with your bank, you will also notice no change with your payments and minimum payments and your billing. All right, so going forward, also anyone that has a variable rate credit card and variable rate car loan will not see any changes on their products either. No change in payment and no change in amortization. This essentially keeps everything the same moving forward. So April 10th, today, no change in rates. And we looked at the 5 economic indicators, being the 5-year bond yield, the unemployment rate in Canada, the inflation rate in Canada, house prices in Canada, and the US Fed decision in Canada. And all those pointed to rates staying the same, not going down, possibly going up. So with that, right now, we came to a good conclusion here, thinking that rates weren't changing, and they did not change. The next rate announcement, everybody, is on June the 5th, 2024. On June the 5th, 2024, I'll be joining all of you live here again on my podcast, Canadian Mortgage Weekly Live, Canada's weekly mortgage news video podcast, and we'll be covering off the rate decision then. June 5th is when a lot of lenders in Canada do believe that rates will start coming down, and this could happen. It is a very aggressive stance, though. One of the lenders that said that rates will come down on June the 5th is Bank of Montreal. I was recently at an event where Bank of Montreal did come out saying that they believe that June would be the first rate cut by the Bank of Canada. But seeing that unemployment just started going up last month, inflation is almost at 2%, and the US is not changing rates just yet. It's a very aggressive stance, and it could mean that Canada becomes the first mover when cutting interest rates in relation to the US versus Canada. All right, so let's take a look at the monetary policy report, everyone. We know that the next rate announcement is on June the 5th. There are 2 rate announcements this summer, June the 5th and July 24th. All right. So looking at the monetary policy report, it does make a few statements here about the economy, and I'll just try to summarize them for you here today. So the Bank of Canada is maintaining the rate today. No changes at all in the interest rate in Canada. Bank of Canada has maintained its policy rate. Looks like the US economy is mentioned in this monetary policy report, showing that it has proven stronger than anticipated. So also, Canada is realizing that the US economy is stronger than anticipated, and it is a very strong economy, and that we should make notice of that. It says, since January, bond yields have increased but with narrower corporate spreads and sharply higher equity markets, overall financial conditions have eased. Interesting. So the bank has revised its forecast for global GDP growth to 2.75% and 3% in 2025 and 2026. That's not bad. I think Canada's always hoping for higher growth, but that's where they're at. And that's roughly to where inflation is at right now as well. However, they do mention that inflation continues to slow across more advanced economies. Though progress will likely be bumpy, inflation rates are projected to reach central bank targets in 2025. So if we look at this, 2025 is where Bank of Canada is saying that inflation will hit 2%. And 2% is where the Bank of Canada has said that they'll be prepared to lower rates. So could that mean that rates might not come down until 2025? That is a very, very loose chance at this moment. If we look at everyone else and what they are saying, everyone else is thinking that rates will probably come down before that. So this is interesting. This is very interesting. It does show with here, though, in the next section, that Canada is recognizing that economic growth stalled in the second half of last year. Economy moved into excess supply. A broad range of indicators suggest the labor market conditions continue to ease, hence the higher unemployment that we saw last month. Employment has been growing more slowly than working age population, and the unemployment rate has risen gradually, reaching 6.1% in March. There are some recent signs that wage pressures are moderating. Lots of information, but they do mention the unemployment rate and that the labor market is easing. So that is good that they are paying attention to that, but it looks like they are paying attention to that, and that's it. Mentioning CPI inflation slowed to 2.8%, which we also mentioned in our pre-show economic indicators and how that is not the target they're looking for. And in this report, Bank of Canada is suggesting that they are expect inflation to be close to 3% in the first half of this year and moving to 2.5% in the second half of this year and 2% in 2025. So the Bank of Canada is predicting the inflation rate's not really going to go down until the second half of the year. And then when it does go down, only 0.3% more and then 0.5% more before the end of the year into 2025. So very slow inflation moderating. And maybe that's what the Bank of Canada is looking to do, slow down the recovery of the rates until the US is ready to lower their rates. Because the Bank of Canada does decrease rates prematurely, we will see an impact on the Canadian dollar, which will really impact exported goods coming into Canada because those goods will cost so much more to the average Canadian. So based on all this information, the monetary policy does go on to say that we've decided to hold policy rate at 5% and continue to normalize the bank's balance sheet. While inflation is still too high and risks remain, CPI and corporate inflation have eased further in recent months. So they are recognizing that they've eased further, and they will be looking for evidence that this downward momentum is sustained. So they will want to see inflation continue to go down, not bump back up slightly. And the Governing Council is particularly watching the evolution of core inflation and continues to focus on the balance between demand and supply in the economy, which right now we are in a oversupply stage, as the Bank of Canada has noted earlier in this monetary policy report. With inflation expectations, wage growth, and corporate pricing behavior, the Bank of Canada remains resolute in commitment in restoring price stability for Canadians. So all this interest rate adjusting is all about price stability. So that is good. Glad the government's stepping in and keeping us in a good position with price stability here. Let's keep in touch with this, everyone. We're going to keep an eye on the Bank of Canada rate. Our next rate announcement is in June, and I'm looking forward to covering this off with all of you. June, we'll have our show on June the 5th. There's no monetary policy, though, on June the 5th. The next monetary policy is happening on July 24th. Also, there's another interest rate announcement on September the 4th. And it's not until September that some other banks in Canada are believing that interest rates will come down. September is one of the months where there's a lot of banks that are predicting the rates will come down at that point in time. And that makes more sense if we look at the slow, long-term approach we have with the Bank of Canada and the way they move. With the banks that are coming to us today saying that the prediction is that June 5th will be the rate cut decision, I believe this is very aggressive and has a low chance of occurring simply because inflation's not at target yet. Unemployment, although increased slightly, is not quite a concern at this point. And the economy, the bond yield, they're pointing towards that we believe that the rates will not come down anytime soon. Let's take a look at the bond yield right now together to see what the market is saying as a reaction to the interest rate announcement. All right. So it's interesting to see this morning that the Bank of Canada's rate announcement at 9:45 a.m. this morning of keeping the rates the same in Canada has influenced the bond yield spread to jump up a further 3 basis points to a full increase of 0.131 basis points higher than open, currently sitting at 3.728%. Wow. So it looks like the economy is even thinking that rates will stay higher for longer in Canada as well. I think the prediction of the June rate cut is not going to happen at this point. We will see rates stay the same in June, and we will see rates stay the same on July on their rate announcement as well. That's happening on July 24th. The earliest I see a rate cut at this point is September, and September will usher in also the fall market, and we'll have to see what happens with the fall real estate market. Comparatively to the spring, could it be a bigger market? It could be, especially if rates do go down. If rates do go down, it's going to make affordability a lot higher for Canadians, which will help Canadians afford that home in a market where rates are high right now. All right, we're almost done our program this morning. What I want to get into just before we end today is that I really appreciate all of you watching my show. As you tune in, I like to be able to empower each Canadian out there to be able to have the information they need to be able to go buy a home and feel educated and empowered, knowing that they know what's happening in the mortgage market. This is you and you feel like this is worthwhile to you, I ask you to follow my channel, subscribe to my YouTube, and share my content so others can see it as well. And really appreciate also my mascot, Interest Rate, joining us this morning. She's been a great asset to the team. She's correctly predicted, I think, the last 9 interest rate announcements, so it's great to have her with us this morning. If you're just joining me on Canadian Mortgage Weekly, Canada's weekly mortgage video news podcast, the Bank of Canada did decide not to increase rates this morning. And we did take a look at the 5 economic indicators, being the bond yield, the unemployment rate, the inflation rate, the house prices, and the US Fed decisions as to what they were saying were going to happen with the interest rates. Before the interest rate announcement was decided, we thought that the interest rates were not going to change based on those 5 economic indicators. We'll continue looking at those 5 economic indicators on next rate announcement episode, which will happen on June the 5th, which is Wednesday at 9:30, with a live announcement at 9:45 a.m., just as we did this morning. We'll look at those 5 economic indicators again. If I'm going to make my call right now into next rate announcement, that is that rates will not go down next time, that rates will actually continue to stay where they are at as the Bank of Canada works toward getting inflation to that 2% target. And they're really focused on price stability. And the only way they're really going to do that is to bring that inflation down. And once that is taken care of, we could see the Bank of Canada change direction and possibly start to cut rates at that point in time. So thanks for watching, everybody. My name is Joe Bladek. Follow me. And if you want to book an appointment, I've been in real estate financing it for 14 years. You can actually book an appointment with me through the link in the video description below. And we'll see you all next time. Thanks for watching Canadian Mortgage Weekly Live, Canada's only weekly video mortgage news podcast. All right.